Hello, I'm Andrew Harvey, Senior Economist at Nationwide Building Society. So UK economic growth has been fairly volatile in recent quarters, but what we have seen is generally a slight slowing in the underlying pace of growth. And what's been happening there is that we've been seeing some weaker global economic conditions. For example, global trade has started to soften. And of course, domestically, what we have seen is increased Brexit uncertainty. Now, while most households and businesses are likely to be relieved that a no deal was avoided at the end of October, of course, we do have this uncertainty continuing, and now we go into a relatively unpredictable general election period. And of course, what happens next will depend heavily on what happens in business investment, which is where the weakness in growth has primarily been. So far as households are concerned, what we have been seeing is a slightly more robust picture, and that's because the labour market conditions have been much more resilient. So housing market activity has remained broadly stable over the last couple of years, with house purchase approvals staying within a fairly narrow range. Underpinning that has been relatively supportive labour market conditions and low mortgage rates, both of which have helped offset the uncertain economic environment. Most recently, the labour market activity data has been a little bit weaker. What we have seen, for example, is a fall in employment, and also wage growth has started to soften. Looking over the longer term, though, unemployment does remain near 40-year lows. And what we have also seen is that real wage growth, so that's accounting for inflation, has actually started to pick back up again. And of course, we shouldn't place too much emphasis on a single month's data, as it can be volatile. Looking at house price growth, we continue to see broad stability in terms of the national picture, albeit with growth remaining at relatively low levels. For example, in October, we saw house price growth of 0.4% year on year, and that's now 11 months in a row where house price growth at UK level has been below 1%. The regional picture is that the areas in the south of England in particular have remained the weakest. These tend to be areas where affordability is more stretched generally, and we have seen small falls in London and the south east. Other parts of the country, such as the Midlands and north of England, have continued to see modest growth of around 0 to 3%. So the forthcoming UK general election is somewhat unusual in terms of its timing and of course circumstances, and of course the outcome is a little unpredictable. However, what we have generally seen in the past is that general elections haven't had a great bearing on house price growth. Rightly or wrongly, buyers tend to have other concerns on their mind. And what we've generally seen is that in the period leading up to a general election, we haven't actually seen any additional volatility in terms of house prices. And what we have seen is the broad trend has been continued in the period following a general election. When it comes to activity, the picture is not quite as clear, but again, there doesn't seem to be any obvious signs of an election-related impact. In the near term, economic uncertainty is likely to persist. Beyond that, prospects will be closely related to what happens with Brexit and also what happens in the global economy. We expect growth to remain fairly subdued in the quarters ahead before picking up as the uncertainty begins to lift. When it comes to interest rates, there remain risks in both directions. The MPC, whilst becoming a little bit more cautious, has actually maintained a relatively neutral policy stance. Its recent monetary policy report suggested that if the Brexit-related uncertainties were to persist and the global picture remains weak, there could be a need for some additional monetary stimulus. However, they've also highlighted that should growth remain on track with their projections and some of this uncertainty begins to improve, then actually they may need to increase rates, albeit at a very gradual pace over the next couple of years in order to maintain inflation at around target. On balance, we expect rates to remain close to their current levels over the next couple of years. Housing market prospects will depend on what happens in the broader economy and how long the uncertainty persists. If the economy performs as we expect, mortgage lending is likely to grow at a similar pace to currently before picking up as the wider economic picture improves.